Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com. In today's podcast, I wanted to discuss some news about E&Y. They have been banned from auditing companies of public interest in Germany for 2 years, and this relates to their Wirecard accounting scandal. Now, as you remember, the Wirecard, they filed for insolvency in 2020 during the pandemic. And there it was found that there was a $2 billion accounting scandal, that they didn't have assets that they said they did. And that has been the monkey on the back of E&Y ever since. And that now they've been fined as a result of that as a firm, only about $500,000. But what's bigger is that they've been banned from auditing these public interest companies in Germany. And this accounting scandal is probably one of the biggest reasons that E&Y is splitting the firm up. And, the accounting firms have these scandals from time to time. KPMG had Carillion, which just went on for years and years. Deloitte is having some issues in China right now. And the big four accounting firms, once you get one of these big companies that goes under and you had no clue, it just follows you for years. People sue you for years. Regulators come after you for years. And it's just an ongoing issue that's hard to resolve. And KPMG has new ones with regards to the bank collapses. And that's why E&Y wants to split the audit firm apart. I think it's mainly related to European activities. They don't want to deal with it anymore. They don't want to deal with the uncertainty of the regulation. They don't want to deal with the blame that comes with auditing, because you're always blamed for a company going under no matter what you do. Because there's auditing principles, and that doesn't mean you check every single thing of the company. And so what the big four accounting firms try to do is they try to do the least amount of work possible for the amount of money they're paid. And clients always decrease the audit revenue or the audit fee for the big four accounting firm, unless they have a large acquisition or something like that, or take on a complex accounting problem. And so I'm not going to say there's no upside to auditing, because there is. And I think there is upside to a firm that solely does audit and can specialize in that. But where you have to mix audit, consulting, and tax together, just becomes more of a headache. And, consultants are always mad at auditors or the partners because, you can't approach certain clients. And you can't approach certain clients, and then you end up getting sued over that client. Now you can see why the big four accounting firms are trying to look into splitting up their firms. Whether or not they do it is another thing. But this is huge news. And there's only more of this is going to come as more accounting scandals happen, as there's hiccups in the economy, as there's banking issues. The big four are just going to be blamed for more things, the more companies they audit. But I wanted to update you on this. This is big news. It's big news for E&Y, and they're split up. And I think it just gives more fuel to the fire in favor of the split up versus just staying the current path. And so I think it's going to be interesting for them. And then it's going to be interesting to see what happens to the other big four accounting firms with regards to that. And then just additional regulations that come out of Europe, and additional regulations that come out of the US too, because KPMG is going to face the issues from those banks that collapsed. So there's just a lot more to come from accounting scandals. So make sure to subscribe to the podcast and check out the show notes for useful links. Thanks for listening.